All right, everybody. I am JC Peretz, founder of AllStarCharts.com, and I am pleased to join you with my man Steve Straza, who is on fire lately. The last thing I want to do is make his head any bigger. Ladies and gentlemen, can I present to you the hottest trader on Wall Street, Mr. Steve Straza? How's it feel?
Listen, it feels particularly good, to be honest. Normally, I would come out here and I would say, guys, prepare yourselves for a rainy day. Times have been good. We've killed it. But we're killing it in a down market, so it feels different right now.
Yeah, no, you've been spot on. I dipped my toe in Bitcoin above 90,000 and got stopped out and, tried again, and you were like, nope, we're shorting it. We're shorting. I'm like, all right, knock yourself out. I got to tell you, you were absolutely spot on. So we're going to talk today about current state of crypto markets, guys. The beauty of 2025 is that there are a lot of TradFi vehicles in which to express a bullish or bearish thesis in cryptocurrencies. And as somebody who's been trading this thing since 2013, I can tell you for certain that has never been the case ever before. And certainly not to this extent. We've gone from maybe a MicroStrategies and, some of these like, what was the one that was kind of like an ETF, but not, what was that called?
Oh, JC, the GBTC you're probably thinking of, but we are
like, we've come a long way. Then you have the crypto miners. Like now we got ETFs, we have options. Like it's fair game. Like this is like, a sector for all intents and purposes because you have so many vehicles in which to express a thesis, right?
We are so truly blessed as market participants having the vehicles and the options that we have in these, incredibly advanced markets in the United States. Yeah. We don't know how lucky we are, really.
So guys, if you're listening out there, if you're new to cryptocurrencies, well, you know what? You're lucky because it was real pain in the neck, over the last 10 years or 12 years or so. Like with every cycle, things got more complicated. You would think that things would get easier, but nope, things got more complicated. They got harder to trade. Like it was really no joke. And this, for the first cycle ever, things are easier. There's more availability to traditional investors. It really is fantastic. So, and by the way, if you're listening out there and you've been trading crypto all along, you're chuckling because you know exactly what I'm talking about. And if you're new to crypto, then God bless.
And something I'm thinking about a lot right now, I can't help myself, is that you're saying we have all these new options. Well, guess what else? It's never been this easy to short Bitcoin or crypto either. And that's something that's on my mind today, right? I think we're in a bit of a new regime here in a sense that the smart money, the big money, the hedge fund money can come into some very liquid, evolved markets, right? That have taken their time, cycle over cycle, to kind of advance to the point where they're at today, where hedge funds can come in and short this for the first time. And I wonder what that will look like, really.
Well, let's be fair. Hedge funds have been able to short Bitcoin and cryptocurrencies for quite some time. I would argue that in more recent times, it's easier for the retail investor. Because remember, futures have been around for a minute, right? There have been some vehicles where institutions could put bearish positions, but I feel like now retail investors have that availability. And to your point, hedge funds have more options and more liquidity. And the fact that there are options trading on traditional options exchanges is fantastic as well. We're talking a lot. We haven't looked at a single chart. This is the chart of the moment right now, the state of the crypto market. It starts with Bitcoin. This is the sun. This is the middle of sort of the cryptocurrency ecosystem coming in hot right around what? It's right now the dominance of Bitcoin is 61.5%. So 61.5% of the entire cryptocurrency market is Bitcoin, and it is below overhead supply. Fact, no opinion here. That is just facts only. Prices in Bitcoin are below overhead supply, and this represents almost 2/3 of the entire cryptocurrency market.
JC, this chart is made for the textbooks. It's literally that good. So if we take it from left to right, okay, we start with a euphoric rally phase where we absolutely blast off into a blow-off peak. We top in a situation that looks a lot like a classic double top. We break down in a very clean and clear way below the election VWAP, which is the average price anchored from where that rally mode began back in November. We come back and we test it so clean from beneath, textbook retest, put that in, it fails, resolves lower, makes new pivot lows, momentum gets oversold. There's literally nothing here that you would want to be here from a classical charting perspective, right? That's missing. All of the classic characteristics of a top or a distribution pattern are here, are present in Bitcoin. So we got short. We bought the puts last week. They paid off pretty nicely for us here today.
So those doubled coming into the morning. So
more than double, a
to
lot
you.
more than double. Yeah.
Well, it doubled and then some. So that's the whole point, right? As soon as the trade doubles, you take half off the table and you let the rest ride. So
Yep.
Going into a market like this, knowing you have nothing to lose and everything to gain, is a really, really nice feeling. Now, let's take a step back and zoom out, right? So you're talking about this is a classic pattern, classic top, no question, no arguments here. Bigger the top, bigger the drop. Now, with that being said, this is about a 3-month top. So when you zoom out, you know, we're still above the prior cycle high. So to me, when you talk about the current state of the crypto markets, I think there's two stories here. You have a massive multi-year base that completed higher and extended to that 102 level. Like, again, speaking of textbook, right? That was the 161.8% extension of that entire base, like to the penny, right? Now, when you look short term, yes, you have this massive top, but you're still coming out of this massive base. So to me, all of this corrective action falls within the context of a larger uptrend that has, granted, it could fail, because if Bitcoin's below 70 and you see this son of a bitch in the 60s, it really is game over. Like it's game over. Like, wow, the wipeout that I would expect to see, right?
I think the short opportunities will only get better here, is the way that things are developing. Yes.
So you think
below the prior cycle highs? Oh, good Lord. Yeah.
Right. The short opportunities are going to be tremendous.
Yeah, the puts we will buy. And MicroStrategy will probably be cheap enough at that point that we'll buy puts in it too.
Let's talk about MicroStrategy. So here's that top in Bitcoin, and you can see that top in MicroStrategy. You know, they look very similar as one would imagine. A different vehicle. If you're, you know, there's a lot of investors out there that are probably wondering, like, Steve, you know, why would I trade MicroStrategy when I could trade IBIT? You know, if they're looking the same, you know, if you're trading in the options market, both have options now. Like, what is the benefit, in your opinion, to the audience out there listening and wondering, what is the difference? How do you think about that?
It's exactly what you're saying. It's the unwind of that situation. There used to be a reason to use MicroStrategy as a vehicle for leverage. Like, I really do believe that there is a situation where a lot of market participants just couldn't find the right places to add leverage, and MicroStrategy was actually one of the better options for that back in the day. Now that's no longer the case. We have liquid options markets and derivative markets for not just Bitcoin, but for IBIT. You know, you can buy and trade calls and puts in IBIT in very liquid options markets. That's brand new. What did that start at the end of last year? Right. So I think MicroStrategy has a big situation where premium's being sucked out of it because it's no longer a preferred vehicle. And it's also a new bear market for crypto, quite possibly. And that would mean a big repricing for a stock like MicroStrategy. So I think it's one of those situations where it's the best on the way up, but it will also be the worst on the way down, right? It's just, it's a lot, it's basically beta, I think, is the situation with MicroStrategy.
Less beta than it was before, but beta nevertheless.
Yeah, and it's beta now in the opposite direction too.
Right. All right. So walk us through this IBIT short. So I was a little skeptical myself. I'm not going to lie. Right. I was like, yeah, I don't know. I think it's a little cute to short this here. You were spot on. Absolutely, completely melted down. You know, walk us through this trade.
Well, because it's easy to bet on a top failing, right? Because uptrends are trends that you want to treat as innocent until proven guilty, right? And up until just 2 weeks ago, there were no oversold readings in Bitcoin. You zoom out, you have an upward sloping 200-day moving average. Momentum's in a bullish regime. It's the leader in its space. However, when you looked at the intermarket, that was really the evidence that I was weighing the most when I made this call. It was simply that when I think of Bitcoin, I think of things like Coinbase and MicroStrategy and Solana and Galaxy Digital, right? And Bitcoin miners. And I looked at all of these assets over the course of the past couple of weeks, past couple of months now. Coinbase completing a top. Bitcoin miners, even the best ones completing tops, as an index completing tops. Galaxy Digital, really the hedge fund or financial
While the best news ever is coming out for crypto. Guys, if you're
and that's
listening out
it.
there, this is really where I want you to focus on.
Yeah, the
Steve, you have
sentiment.
been so spot on. It makes me sick to my stomach how right you have been with this particular narrative situation and what's actually
Yeah.
happening in price. Folks, listen to this. Listen to what he's saying here. Go ahead.
At the beginning of bull markets, asset prices will actually rise on bad news. We see it all the time, and it's actually one of the most telltale signs that you get that a new bull market is underway, right? When they can't knock it down, not only can they knock it down on bad news, but the price is ripping higher on bad news. That situation works in reverse at the end of every cycle as well, right? The beginnings of bear markets also are characterized by the prices of assets falling on good news or failing to rise on good news. And for me, I mean, this is a high watermark that I don't think will eclipse for another decade. In other words, the US government, the largest player
The
in the
high
financial
watermark in
world,
sentiment in
yeah, I
terms of
don't
news.
right. I don't think we'll top this anytime soon because think about it. The biggest financial player in the world just came out and said, no longer are we not going to be predatory towards you, but we're flipping the book. We're just going long. And that changed so much in what, a 12-month period? And the
Yeah.
market stopped rewarding it, and that was just downright strange. That's not something that you want to see in a bull market. That's not a healthy bull market. That's great news. Asset prices better be up 10, 20, 30%. God, in the case of some of these altcoins, they should be up 100% in a day, and we just weren't seeing it.
So essentially, what ended up transpiring is that all of this news of the U.S. government owning Bitcoin and other cryptocurrencies, and Coinbase not being in trouble with the SEC anymore, and all of that
Yeah.
stuff was already baked in. You already knew it. That's why prices were what they were. And by the time that news came out, there's nobody left to buy. It was
None
not
of
a
the
scenario.
headlines, none of the headlines right now, JC, are enough, and that's a problem.
So IBIT, hell of
Yeah.
a short. Nice job there with the breakout multiplier strategy. And it's not just the IBIT, but in this environment so far this year where things have been choppy at best, depending on what assets straight up down, in some of the cases like tech, there are silver stocks here. There are healthcare names. There are
Yeah.
international ADRs. And correct me if I'm wrong, in this trading system, breakout multiplier, it's 9 trades in a row have at least doubled. Do I have that right?
Yeah, we have 9 consecutive trades where we've sold the double, right? So that means
In this
you
environment, 9 in a row.
yeah, and we're happy about that, right? Because
You
we'll
think?
have a streak like that, JC, in a bull market like Q3 of 2023 or 2022, where everything's ripping, everything's working. We'll go 10 in a row. That's not unusual, but it is a little bit unusual to go 10 in a row in a down market like this. So that's pretty cool because we focused on pockets of relative strength and we've been extra selective because if you go back to that VWAP chart, it's not just crypto, right? The market's been cracking and we've seen that. We used crypto. We thought Bitcoin was simply the best vehicle to express that bearish thesis. That was more of a risk asset thesis, right? Than
Yeah,
a
I was going to
crypto.
say maybe not the best, but certainly a good one.
Look,
There's others as well, of course.
it was clean, clear level, high beta. A lot of stocks were extended last week. And could we have come in and bought puts, on regional banks or something last week? Yeah, we talked about it. We thought about it, but we're never really going to chase things, right? We're
Not,
looking
it
for
wasn't as clean. It wasn't as clean, the regionals.
we want the setups that they're just laying up to us,
Yeah.
right? We're playing with derivatives. Like when we see an entry like that, we'll take a shot every time, and it's just super clean like that top in Bitcoin. However, the stock market's been rolling over, but we've been focusing on areas of relative strength, particularly overseas, precious metals. We've been hitting up commodities markets, some stuff in speculative growth, C limited,
China.
Ch- China, but not even
Yeah.
just China. Southeast Asia more broadly speaking. There's a whole big world out there. When you look at the performance charts, basically we're learning from the tape and we're leaning into the areas of the market that keep working and leaning away from the ones that are not. So we're doing less longs in US equities, more longs in international equities, and fringe situations that simply won't move or are uncorrelated with US equities.
Let's take a look at some of the damage that's being done underneath the surface in the equities market. I think you got to start with semiconductors. I would argue the home builders have hung in there pretty well, which is like surprising and impressive, but that's another story. As far as the damage is concerned, semis, technology continue to lead the way to the downside. The underperformance there started last summer in technology, and you could really see that in the relative strength chart. New 52-week lows for semiconductors on a relative basis. Is this the most important? I mean, it's kind of looks like Bitcoin, right?
Listen, most important, I think if these charts go, we'll be buying a lot more puts in the future. Simple as that.
I agree. I agree wholeheartedly. For the bulls, if you're out there and you are bullish the stock market, you think that this is blown out of proportion, stocks are going higher, you got to use this as an opportunity to buy. I would argue, and correct me if I'm wrong, Straza, that this chart needs to be front and center. And I don't say the only way, but a very strong indication that your bullish thesis is correct is if semiconductors are getting back above those key levels. I think that is probably the biggest thing that I could think of that would prove that your bullish thesis by this dip right here, right now is valid. To me, that's number one.
As someone who's slowly turning bearish on risk assets, one of the top things that would turn me back bullish, we circle this right here, right? This ends up being a scoop. It's a failed break, and we rip higher back to and through the upper bounds of these range. Oh my God. Nothing could be more bullish. And we're open to that. We did something similar and bet on a situation like that just the end of last week, and we already sold a double today in Pulte Homes. We leaned into a home builder with a pattern that looked exactly like this, right? Because at this point, and people hate to hear this, JC, but this is just the truth. There are certain points, certain potential inflection points in markets where I see charts like this and I say, God damn it, I don't know which way they're going to go. But whichever way they do, I want to lean into it and hard. And that's how I feel about these charts and these levels right here, right now. We're prepared to buy calls. We're also prepared to buy puts. We'll probably do both. Don't yell at me if and when we do. It'll be the right thing.
Well, to be fair, you are doing both, right? You're buying calls in the home builders and puts in some of the other stuff. So right?
I'm saying I'll do them in the same asset back-to-back days. Like we're that close right now. One big green candle with confirmation, with follow through the next day in either direction, we're going to lean into it and go. And that's it. And we'll treat every chart on their own merit too. We've been dabbling in staples. Staples been so strong.
So staples on a relative basis means two things. Number one, staples are probably doing pretty well. Number one. Number two, the rest of the market probably isn't, right? Because when staples are doing this well, I've known Steve, I've never seen you talk about consumer staples as much as you have lately with a smile on your face. This is a man, ladies and gentlemen, if you're paying out, this is a man who would laugh at such things. Not too long ago, I might add. Not too long ago, would laugh. Canned goods. I'm not buying canned goods. We're buying growth stocks. Now he's like, I'm not buying growth stocks. I'm buying canned goods in grocery stores.
When it's a clear and undeniable bull market, I'll call you crazy. I'll yell you out of the room for talking about staples.
You did do those things. Right. You did that.
But last week, we bought a grocery stock, because that's what's working. It hit new all-time highs today, right? So we're not afraid to lean into the areas of the market that are working. And what's beautiful about equity markets and the derivatives market, options markets, is that we have vehicles in all these different asset classes. We can go to commodities, we can go to precious metals, we can go to base metals, we can go to energy, we can go to grocery stocks or pharmacies or healthcare, weird stuff, and we do. So these are some of the trades that we've put on just over the course of the past 2.5 weeks. I think so. We sold a double in every one of these, and just look at what a diverse list that is, though, JC.
Shops, which is what? This is the Vietnamese one.
No, this is actually Chinese niche online retail, but it was an early leader and that went sideways for a year and a half, 2 years. I really like it. Bristol Myers, this to me is an uncorrelated trade right now. Why? Healthcare is going up while the broader market goes down.
That's exactly right. Yep.
Simple as that. So we're leaning into healthcare. We put on 3 new longs in healthcare. We took the double from Bristol Myers and we said, let's sprinkle it into 3 other healthcare names. We like this group so much, right? So we're just doing different things. Silver miners, Lemonade, speculative growth. This is a post earnings situations. Sometimes we see a stock where the broader market is so weak and we just know there's selling pressure here, they're sending everything lower. And then we see an earnings report that it's just so good. And we know the stock would be up 10, 15, 20%, but because of the broader market, it's only up, I don't know, nothing to 5%. And that was lemonade. We couldn't help ourselves. So we get into these post-earnings situations because the price of the calls, they're getting cheaper all morning after earnings. The market opens and they call it volatility crush, right? Volatility is getting crushed because the market expected a big splash on earnings and then it opens up unchanged, right? So the volatility comes out of the calls and then we come in and buy them then, right? So we get a discount. We're like basically shopping the deals when we're doing that. And then you can also catch the market being offsides.
Speaking of shopping for deals, if you're in Southeast Asia, this is where you do that. That's called a segue, Straza. You saw what I did there? A lot of ADR work here, obviously, because that's where the money's being made, right?
You talk about it on the morning show, and I think you're spot on. The best stocks in the United States are being used as ATMs right now while investors go and look for better opportunities outside of the United States, right? So we're not focusing on growth stocks in the US. We have so many beautiful, amazing growth stories outside of the United States that nobody ever talks about. C Limited, as far as I'm concerned, middle of last year, this was a completed reversal pattern, right? And we've been climbing up the right-hand side of this base ever since. We've put these calls on 2 or 3 times since, and we'll probably keep doing it all the way to 300.
So these trades have all worked out. In fact, the first time that this trade was put on, Sean thought it was a shipping stock, and it was up like 400% or something like that. So since then, it's presented several more opportunities from the long side. Obviously, C Limited, not a shipping stock, actually the Amazon of Singapore. Do I have that right? Southeast Asia in general?
This is a favorite. I'm not going to lie. I might be a little bit biased towards this stock. But yes, the first time we put the trade on C Limited, we were in the 30s.
Yeah. So this is the gift that keeps on giving. And that's the beauty of the strategy, right? So looking out 45, 90 days, but that doesn't mean that the trade is over. In fact, in the strongest trends, you have multiple trades. Listen, we're talking about making money in Bitcoin on the way down, but guess what? On the way up, there were so many opportunities from the long side, similar to what C Limited has delivered. And just so you can see this, the wide range of the types of opportunities that you're seeing in Breakout Multiplier. Again, these days, a lot of uncorrelated opportunities simply because that's where the money's been going. Asia, here we're looking at a precious metal stock, AG, First Majestic, same thing.
It's all about the way that we enter. Like you can almost see a little shake 3 candles ago here, just a tiny little spindle shaking beneath the lower bounds, that lower blue line. And that's where we get in. The entry is everything. You get one big, green candle, 2 big green candles coming out of that situation, and you sell a double. And that's what we're looking to do, JC. I think less about trend and more about entry in messy markets like this. In other words, I follow the follow-through rule more than the primary trend rule. I want the best, biggest momentum green candle because I know that puts me in a position to sell the double the best rather than sell a multi-bagger in the future. This is about getting by and surviving. We're actually looking and striding to sell the double first. When we sell the double, we know nothing can go wrong, right? It can only be upside from there. So in a messy market, I am far more particular about nailing the entry and making sure that we're putting ourselves in a position to get follow through because follow through usually means a double.
Straza gets so excited. He wants to make t-shirts that say sell the double because there have been so many doubles. Just look at these. These are the doubles in China just since the election. What is it? 10 of them have already doubled, right? And there's 2 of them that are still open.
I think we're perfect except for 2. I'm expecting
only Chinese ADRs. Yeah. So again, if you've never traded Chinese ADRs, these are just stocks that are in Chinese exchanges, but you could trade them on U.S. exchanges through what are called ADRs in the same way that we trade Microsoft and Apple and things like that. It comes obviously with added volatility because it's an ADR and you tend to see that, particularly the overnight fluctuations because it trades over there in different hours that it trades over here. So keep that in mind. But nevertheless, in the options market, you're going to get those fluctuations nevertheless. It's what you're signing up for. So we don't care whether it's China, precious metals, U.S. stocks. It doesn't matter. What's the difference for you, right?
We're also benefiting off of the trend of weaker dollars through all of these trades, right? There's been a big tailwind for all of these ex-US trades that we're putting on that's come in the form of falling dollars, right? So we're aware of that while we do this.
Right. So that's where the intermarket work comes in. And that's where it starts at the end of the day, whether we like it or not. It starts with putting everything in perspective. And there are themes, right? There's a reason why all of these or most of them have traded at least doubled, and you're not seeing that in maybe some of the other areas around the world, right? So ladies and gentlemen, if you're interested in joining what I consider the greatest strategy I've ever seen in my career. I have never seen something this consistent, this repeatable, for this long. Wow, very, very impressive and simple to understand, right? It's really a three-step strategy, right?
Yeah.
You got the trades that are a go, that are already in the system from the All-Star Charts research. Then you're looking for compressed volatility, right? So when stocks are a go, but volatility is compressed, and then you get that big candle like Steve was talking about, then that triggers it. You're buying, call options 45, 90 days out, 25 delta calls, easy peasy. Very, very simple. And as soon as the premium doubles, you take half off the table, right? I mean, that is just such a classic strategy, and you let the rest ride with no risk at that point. You're playing with house money. So you're getting the breakout multiplier trades every single week. Steve Straza's mastermind course, which is fantastic, very well done. You get access to exactly what that process is, not to mention the rangefinder app, which, to me is really valuable, because in the old days we used to use spreadsheets. Now we have the rangefinder app that literally tracks where the trade is relative to both the ideal entry point and the price target, and obviously setting up those alerts to stay active when you're looking to put trades on and take trades off the table. You can also set your settings. You can get them emailed as well. So that's up to you, or the push notifications, or both, or neither. And then you just look at the dashboard whenever you have time. Either way, they're going to be emailed to you in real time. The weekly strategy session, this is where Straza dances. Is this your favorite part, Straza?
Yeah, but you're talking about how the system is very simple. And I think that's important, and we built it in that way for a reason. Literally anyone can understand and do this, but it's more than that. We understand that there's a good degree of teaching and learning that needs to take place for you to take full advantage of the system. So we have a huge emphasis on learning, and we encourage everyone to join us at our weekly strategy sessions, where we have an open Q&A, and it's completely interactive, and we just talk about it, and we work through all the different situations. And what you might do, JC, the way you sell your existing half of calls might be different from the way that I sell my existing half of calls. And we both might be right to do those different strategies, right? And we talk about all of those things on there. I'll say, hey, here's what I'm doing with my calls, guys, and here's why. But here are some other things that I thought about. You could do it this way, you could do it that way, you could do it this way. And we work through it. And then guys come on and girls come on, 2-3 weeks later, where we're talking through these problems and issues together and different considerations. And they say, hey, I'm doing this with my calls. And I dropped a VWAP here and I'm doing that. And it's so nice to see the way that they're learning and understanding the process and the system, as we do it. And that's really the idea, is that, guys, yes, we're all going to put these trades on together, but the idea is that you're going to become so comfortable in this system that you're going to know what to do. I'm going to send you that email, hey, it doubled. You're going to be like, I already got my alert. I sold the double. And I love hearing that. And that's what happens, right? And that's really the idea. It's so good.
So if you're on YouTube, the link for Breakout Multiplier, listen, this is a lot cheaper than it should be. One trade pays for itself for the year and then some. So $9.95 a quarter. This is a special offer. We have actually never done this before. So $9.95 for the quarter. If you are on YouTube, click the link in the description. And if you are on the website, you can just, the order form is right below. Straza was just talking about the educational component to this. You get so used to doing it, you're doing it on your own. The 4-week educational course, I think, is a huge value add as well. And one of the things that I love about the 4-week options education course that you get as a member of Breakout Multiplier is exactly what Straza was just alluding to, which is the different perspectives. This is how Straza's doing it. Sean is going to do it a different way. JC might do it another way. You might do it another way. Or sometimes we'll do it the exact same way, right? That's not necessarily the point. But to have that roadmap as to how we want to make money, how we want to take our profits, if you want to add your own twist to that, people do. And that's okay, right?
And they should.
Great,
And they should, right? That's how this works. As far as I'm concerned, I have one job. in this system. I'm going to get you to a place where you have a free ride, right? Consistently, at least half of the time. We do this 50% of the time. We have the stats, right? I'm going to get you to a place where you have a free ride. And I'm going to tell you, you're a big boy. Look at this. You already sold the double. Now you got half of your position. It could be 3x, 4x, 5. It could also be a 0. It could very likely be a 0. Right? But then you got to figure that out, and we're going to talk about it, and we're going to work through it. And this is a great sleeve to add to simply any portfolio system. Long-term investors, short-term investors, whatever you're doing, this is something that you can add to your situation, and it can only amplify your returns, particularly in bull markets, but also in bear markets. So I love it. I love our strategy calls, and I'm super happy about the way that we've performed so far this year.
No, you're absolutely right. I got to tell you, when it comes to the amount of education that we're doing, not just so that you can execute it on your own, but you can build on top of that. We've seen so many success stories of exactly that. Straza makes a really important point of an additional component to the overall portfolio. So guys, if you're on YouTube, click the link in the description. If you're on the website, just click the link right below. But the idea of adding an additional layer to your overall strategy and lowering the overall volatility in your portfolio. I mean, I am such a huge firm believer in that. I mean, it's not even my opinion. It's just a fact, right? Ray Dalio has written extensively about it. You know, he calls it the Holy Grail. The Holy Grail meaning adding additional uncorrelated strategies to what you're already doing. You're not sacrificing forward returns at all. All you're doing is lowering the overall volatility in your portfolio. And what that means, what that translates into is that you're accelerating the compounding of returns over time. So you're lowering your overall portfolio volatility and making more money faster, right? By adding additional layers to your portfolio. And I think this is a great example of that. We talk about Kenny and, you know, day trading could be an additional component, and that's for some people. And this is something else that's for a lot of other types of people or the same person, right?
JC,
if you're looking for an additional strategy, I think this is a great one. By the way, both long and short, and the time horizon is also very specific, which qualifies for that uncorrelated, you know, approach.
From what in my career, I've tried so many different things. I play with all the new tools, right? I try different things. This is what I found to be the most effective and responsible way to overweight a theme. That's it. You like something a ton, right? And you want to put a lottery ticket on it. This is how we do it. That's how you do it.
No, I like that. And let's remember that, you know, sometimes the returns are, you know, a double and then you might lose it. And then so it ends up being a break even. But we've had 20x, 50x returns. That Soundhound was an absolute beast. So one trade that goes 50x, this pays for this service for the rest of your life. So I think you'll be all right. So Steve Straza, thank you so much. Ladies and gentlemen, you could be anywhere in the world, but you're here with us and we appreciate you. Click the link below if you're on the site. If you are on YouTube, the link is in the description. Breakout multiplier. I'll see you in there. Adios.
Thanks, everybody.